Could you please show what Fibonacci extension tool you used in a previous video and how to set it up? I don't see such settings in TradingView.
I assume you're talking about the video where I made the talk about the matrix of Fibonacci. So I'm going to go through that again, and I'm going to show you the tools. Here, if you go here on this side of the screen, you will see several Fibonacci tools there. There is the Fibonacci retracement tool, the Fibonacci extension tool. You see I have two stars there because I use them very frequently. You have Fibonacci channel, Fibonacci time zone, Fibonacci speed resistance fan, and so forth and so on. All these tools have one purpose, and that is to identify levels of support and resistance exactly as the way that I show you the matrix of Fibonacci. Those are ideal places to identify levels of support and resistance that are typically hidden. In other words, I call them invisible levels of support and resistance that typically work very nicely. Any one of these will do that job. Some of them are more precise, some are more practical. For instance, the Fibonacci channel is a very, very nice tool. You can connect the low of any uptrend with the next low, like in this case, for instance, and then you click and put the extreme of the channel in the one of the pivot high. For instance, this one appears to be working really well. I'm using this one right here, right? Appears to be working really well because, as you can see, everything here worked beautifully as support. Here worked beautifully as support. Resistance worked beautifully as well. Look at these exact precise levels of support and resistance. Look how prices stop there every time they try, and even though they went a little bit above here, when they came back, went directly to support here. They are they seem to be very, very, very good. So indeed, you could use a channel like this. I don't find it very practical. I prefer to use the the matrix I show you, but something like this works and typically works very nicely. Another one that I love working with, but I don't use it very often, is the Fibonacci speed resistance, where you connect the low here. I'm talking in an uptrend. Of course, you would do the same, the opposite basically in a downtrend. You connect the low with the high, right? In this case, that would be this. And basically, what you would see is, again, levels of support and resistance. You can see how it worked very nicely as support and resistance here, here, etc. So what does it tell you? Well, if prices start coming down, for instance, it will have this one as a target, then the next one will be the target, and so forth and so on. This one is a very nice one. I don't use it often, but indeed I use it as well. Now let's talk more about the levels of Fibonacci extension that you asked me, the tool that you didn't see in TradingView. Here it is, Fibonacci extension, trend-based Fibonacci extension. You use that one. And the way that we used it, remember, we connect a low, a significant low in a time frame that is high enough. In this case, I'm using a weekly chart. It could be a monthly chart. And then you connect it to the next pivot high. Okay, it could be this one, it could be this one. So basically, you have to play by ear. You need to do it and see if it works. For instance, if we connect this low here with this pivot high here, the first one, and then go back to it, to the origin of it, we notice that the 4.236% is, yeah, it worked very nicely, right? It worked really, really to the pip here. But now we don't have anything to the upside. So this is not precisely the ideal one that we work with. So you need to adjust it and use another one. Maybe you can use the next one. Okay, you connect the low with this one and see how it works. And for instance, you go back to the origin of it, and well, it worked better, not better, but it worked okay, because the 4.236 is a little bit higher. But maybe you say, well, what if I use the next low instead? For instance, in this case here. And you can see that one worked really great. Or you can use this low here and see which one which one worked better historically. For instance, in this case, I think this one worked better historically because you can see the highs here, the lows here, the highs, the lows, the highs, the low. All of them have been working really well as support and resistance, sometimes to the pip. Look at these ones to the pip, perfect, right? So then you would use this one. This would be the Fibonacci extension. Now, you probably don't have all these levels when you use yours. All you have to do is to click on the tool, double click, and then you will see this table here where you can choose all these different levels that you might want to use. I'm using, in this case, for this particular use of the matrix, I'm using the 1.382, the 100, the 2.618, the 4.236. Actually, those would be enough, but you could also use the 2.0. I didn't use the 2.0. Here is 2.0. You can use the 1.236 or the 1.382, either one or both of them. Here I have the 1.382, and you can use the 3.618, very useful as well. So you can use the ones that I have here, or the ones that you decide to use because of the experience that you're developing. So that's a way that you would adjust these. So you can take some of them. For instance, let's say that you took the 100% out, and then you will see them disappearing from here. See the 100%? You click here, now it's gone. Yeah, so that's simple. Now, you said in the question,
in what cases we should use Fibonacci extensions and when to use Fibonacci retracements.
The question is a bit general, no? Because if we apply the question to this particular example of using the matrix, then I would say the Fibonacci extension is when you first project the different levels of support and resistance in the weekly chart or the monthly chart. But when you move to a smaller time frame, let's say that we want to see the levels of support and resistance within this area. Okay, so then we move to the, let's say, daily chart. And so now let's move to that area, which was here, this area. So in this case, we want to use the Fibonacci retracement tool. So we go back here and choose this one, Fibonacci retracement. Okay, and then we connect the lower line with the high line here. And look how beautiful it worked again, the Fibonacci retracement tool. Perfect. So these would be the levels that you're going to be watching when when prices start falling down, which I expect them to fall down. And then as they fall down, you would find that eventually when they come here, they will find support in these levels. And you want to see the levels of support and resistance on this area. Well, again, you use the Fibonacci retracement tool and connect this level here of Fibonacci with the next. And then here you will see that when prices, assuming that prices continue moving lower, when prices start moving lower, they find support here, and then they will find support here and in the next one. And once they penetrate all that and go back up, they will probably use those levels as resistance as well, just as it happened here. Yeah. So this is in the particular application that we are talking about now. But generally speaking, we could say that you are going to use the Fibonacci levels of extensions if you're using Elliott waves and you want to calculate the levels of, or the targets for, let's say, well, let's use a different chart. Let's move to this one. So let's say that we have a wave 1 and wave 2, and now wave 3 is in progress, and we want to calculate where that wave 3 is going to go. Then we use the Fibonacci extension tool. Okay, so we connect the low with the high of the wave 1, and when we project it from wave 2, and then we expect that wave 3 is going to reach maybe 1.618, 2%, 200%, or 2.618. So we actually use the Fibonacci extension tool to basically have those targets for the wave 3. The wave 3 that is still in progress and that we want to project. Now, let's say that wave 3 went perfectly to the level of the 2.618 that we were expecting. It reached there, and now we want to see where 4 is going to go. At that point, you want to use the Fibonacci retracement because you want to see how much prices are going to retrace from that leg. So then you would use the Fibonacci retracement tool to calculate from the low to the high, and then you are going to be looking for, in the case of a fourth leg, of course, you're going to be using the 0.382 level, okay, or the 0.236. So then you know that likely prices are going to move down to this level, maybe do something like that, and then the 382, and that's when you use the Fibonacci retracement tool. If this sounded too complicated, don't worry about it too much, because we're going to go through that during the intensive in a way that is going to be a lot more progressive and easy to understand. So for the time being, don't worry too much about it. Just know that for the application that I gave for the Fibonacci matrix, then when to use the Fibonacci extension is when you start using the weekly chart or the monthly chart and the Fibonacci retracement to see the levels in between the levels of the Fibonacci extension.